bright and beautiful Thursday morning. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations right here on Business Morning. I'm Ini John Mekwa. We start as usual from the foreign scene or the global scene, and we tell you what's going on with oil prices. For this morning, it has eased as unexpected bills in the U.S. crude and fuel inventories raise demand concerns, while investors are staying cautious, focusing on renewed Iran-U.S. nuclear talks. So let's look at the numbers. We see 1.37% added to or reduced from the Brent, and that's brings it down to $64.02, and WTI also has about the same percentage drop at $60.75 a barrel. U.S. crude and fuel inventories posted surprise stock builds last week. The Energy Information Administration has said as crude imports hit a 6-week high and gasoline and distillate demand slipped. On the fifth round of nuclear talks between Iran and the United States, that will take place tomorrow, May 23rd in Rome, according to Oman's foreign minister. Iran is the third largest producer among members of the Organization of Petroleum Exporting Countries. An Israeli attack could upset flows from the country. U.S. and Iran have had several rounds of talks this year over Iran's nuclear program, while U.S. President Donald Trump has revived a campaign of stronger sanctions on Iranian crude exports. And then one other factor affecting prices of oil this morning is Kazakhstan oil production. That has risen by 2%. That's for the month of May, defying OPEC Plus pressure to reduce output. And then we come to Nigeria, where the central bank has unveiled a draft baseline standard that's aimed at improving automated anti-money laundering and practices for banks and other financial institutions in the country. In a statement released on its website, the CBN said that the framework aims to encourage financial institutions to adopt emerging technologies such as artificial intelligence, machine learning, and big data analytics to detect, prevent, and report suspicious activities in real time. On implementation and compliance, the CBN mentions that financial institutions shall align their AML solutions with these baseline standards within 12 months of the issuance of the standards. Now, yesterday, May 21st, was World Product Day, and it was done in Lagos, Lagos 2025, with the theme Build Bold, Solve Big, and it brought participants who are product professionals, startup founders, scale-up teams, ecosystem enablers, as well as others who are in the value chain. World Products Day is a global celebration of the product profession and the passionate community that powers it. The day shines a spotlight on the evolution of product management and the impact of craft. The organizers of the event say that it is dedicated to advancing the culture and craft of product thinking across Africa. They assure all that, unlike general technology conferences, World Product Day Lagos is grounded in execution and designed to give attendees tangible takeaways from customer discovery tools to recruitment opportunities needed to build better products that solve local and regional challenges at scale. We will tell you more about that in just a bit. But first, NEM Insurance PLC has held its 55th annual general meeting, during which the board presented results believed to be reinforcing the company's leadership position in the industry. The group reported a 78% increase in profit, totaling 33.7 billion naira, and celebrated a historic milestone of surpassing 100 billion naira gross premium income. The group chairman, Mr. Tope Smart, describes the 2024 performance as a testament to the company's commitment to creating innovative products and delivering value.
Thank you very much.
For the 55th time, the board and shareholders of NEM Insurance convened for their annual general meeting. Top item on the agenda is to receive and review the audited financial statements for the year ended December 31, 2024. Shareholders review the documents provided as directors and auditors present their reports. The visual graphic highlights the group's impressive performance, showing a revenue increase of 88%, a profit rise of 74%, and a 67% growth in total assets.
The company has done incredibly well.
According to the chairman, the outstanding results were driven by the company's milestone record of gross premium income of over 100 billion naira.
Because this is the first time in the history of any general insurance company in Nigeria to record that kind of incredible number. 100 billion. We were 65 billion in 2023, and then we moved from 65 billion to over 100 billion. And so we are quite happy, we are delighted, and when you look at the kind of dividend too we are giving out, we moved from 65 kobo in 2023 to 1 naira. That is a record on its own.
Following the company's performance, the board's recommendation of a dividend payment of 100 kobo per ordinary share of 1 naira each is approved, amounting to 5.1 billion naira.
If we look historically at where we're coming from, we will realize that NEM has come a long way. Last year, we paid 60%, NEM paid 60 kobo. This year, NEM is paying 1 naira. That's a quantum leap. And let us not forget that there are a lot of things that, a lot of plans that NEM has, and we will need to strategize and to apply our resources intelligently.
The highest so far this year is NEM Insurance, and we really appreciate for that. Getting good returns on our investments, and we hope that the trend will continue in NEM Insurance PLC. We are very happy.
As NEM Insurance attributes its success to the efforts of shareholders and the dedicated workforce, the company reaffirms its commitment to pushing boundaries and maintaining a growth trajectory within the industry.
Vice President Kashim Shettima has assured the people and government of Taraba State of the federal government's support to optimize the vast natural resources that the state is endowed with for economic prosperity. He gave the assurance at the first Taraba International Investment Summit that was held in Jalingo, the state capital. During the event, which had prominent personalities in attendance, Governor Abu Kefa says that his administration will continue to provide an enabling environment for businesses to thrive.
It's the first ever Taraba International Investment Conference, and not surprisingly, it parades some of the nation's top government and business executives.
Just a question of our country on an equal keel. May God hear our prayers. Did I hear you say amen?
The president is represented by none other than the vice president, Kashim Shettima. State governors, religious and traditional leaders are also present.
I like the way the governor has been working.
In addition to that, Africa's richest man, Aliko Dangote, and billionaire businessman Tony Elumelu make up part of the dignitaries at the event. And it's straight to the business of the day, as the state governor highlights why Taraba is seeking investors at this crucial time.
What I will say now is that Taraba is peaceful, Taraba is safe, Taraba has huge human resources, Taraba has huge natural resources, and today I have created a good business enabling environment for all investors.
He didn't have to wait for long before those that have been in the business of investing for decades align with his vision.
The reason I love investment and I preach investment wherever I go to is that it has a lot of benefits. First, it helps to engage our young ones. I am a champion for our young ones, champion of African youth, Nigerian youth. I believe strongly that employment is one sure way of empowering our young ones.
I want to give a word of advice, Your Excellency. The only way for you to attract foreign investments or investors is by having local investors. Domestic investors are the ones that actually attract foreign investment.
Traditional and religious leaders also had a thing or two to say about the state and areas they believe require government attention.
today we have that confidence, say, yes, somebody somewhere is doing the right thing, being very pragmatic in handling the affairs of Taraba, and everybody can come to Taraba peacefully and invest.
Focus on the strength of Taraba, focus on the strength of the human and material resources you have in Taraba, and smart money will chase you.
Taraba State's strategic position and location should be very inviting to investors. As the state government continues to develop its infrastructure and human capital, we hope that Taraba State will stand as a promising destination for global investors seeking sustainable and profitable ventures.
Although this is a business event, when it was time for the Vice President to speak, he enumerates some of the administration's efforts at attracting investment into the country and why Taraba is crucial to the government's vision.
This summit, in essence, is not just a call for investment. It is a call for partnership. The wealth of resources in Taraba is too vast to be reduced to mere statistics. What we seek are collaborators, partners in progress. The federal government is fully committed to supporting every step you take after this gathering. We are not distant observers. We are here with you, ready to provide the institutional backing to turn ideas into accomplishments.
Former Vice President Atiku Abubakar, drawing experience from his private business, also speaks of the opportunities that are waiting to be tapped in the state.
As a private businessman myself, I recognize that investments, foreign and domestic, drive economic growth and development. The government is urged to implement measures that will address investment risks and implement interventions that eliminate bottlenecks in business registration processes.
With the array of speakers on display at this conference, it is clear that the Taraba state government has a lot to draw from and is set to work immediately on attracting investors into the state.
More states seeking investment, seeking to draw the attention of investors to their states, especially no longer news the vast potential, mineral resources, and in all the parts that are in the different states in Nigeria, and that was Taraba. Now let's take a break on the program. When we come back, we do have conversations waiting for you. Please stay with us.
It's not technology that moves a nation.
Welcome back. It's still Business Morning right here on Channels Television. And yes, we're still talking about driving investment into the country. This time we're looking at exports from the country, and the conversation around easing activities at the port has also been on. Now we're looking at it from the experience or perspective of a major player at the ports in Nigeria, and that's APM Terminals. I had to sit down with the regional managing director in Africa and Europe of APM Terminals on how they perceive the work and the policies of the government targeted at easing activities at the ports. We see that APM Terminals recorded 30% increase in its export volume, and that also makes you the highest. You have the record of the highest exports in the country. I must say, the export story from your perspective is good, but would you say that the Nigerian export story is a good one so far?
Well, we have a very long history in Nigeria, and that has been a very good journey. Of course, that journey has not come without challenges. And that's also why we are there. We are there to serve the country, help the country to deal with those challenges. So as you say, it's very encouraging. What we see in the first quarter of this year is the exports are coming up, and that is a sign that things might stabilize, and that indeed we see Nigeria starting to fulfill its promise of not only being a main import but also an exporter hub. But more needs to happen.
So we've had a lot of news items from the government when it comes to export, making ports more export friendly, easing transactions and all of that. But in reality, what changes have you seen, and what changes would you like to see in the exports ecosystem?
I've seen a different conversation about the port ecosystem, and that indeed, as you say, that touches upon digital, but it also touches upon some of the hardcore elements, as I call it. For example, rail is really important. If you look at congestion, so what is important for a port is it's not just build a great port or have a great port, it's how exporters and importers get their cargo in and out of that terminal. So we had a very good and tangible progress on rail, but with your government, we are having discussions on barging, but actually the most important development where we have put in a proposal to the Nigerian Port Authority is a vision of how we can upgrade Apapa port. And that, in our opinion, is really necessary for Nigeria. And why is it necessary?
Fix would you like to see? I know there's the issue of dredging, human interference, and all of that. Which of them would you think should be prioritized at this stage?
The dredging is a good example, and that is exactly part of our proposal. Because if you don't dredge in Apapa, if you don't change basically Apapa Island, you will not be able to receive larger vessels. If you receive larger vessels, then you can reduce what we call the slot cost. And reducing the slot cost means that for exporters and importers, trade will get more advantageous. So, and therefore you need to dredge, because then you can have those larger vessels. So that's indeed a very important part of our conversation. Human interference. I earlier said digital matters. Human interference typically slows down the speed. Typically creates bureaucracy. And in 2025, there are, and that's where we take great pride as APM Terminals, we are a technology-empowered company. So we have solutions to interact with customers. We have solutions that can make life easier for customs processes. There we are looking forward to continue the dialogue and make more progress. Ultimately, it's about the ease of doing business.
I've had conversations with some exporters, and a lot of them have expressed frustration over how long it takes, to process their goods, most especially for agricultural produce, which they say they lose at the end of the day. How should this be handled?
I don't know exactly how bad it is on agriculture specifically, to be really honest. But clearly, if I talk about the ease of doing the business and speed and congestion, this is absolutely critical for agriculture, because you have a lead time that you need to get your cargo out of the country, and it's saddening to see if you can't export your great produce because of congestion, because of the lack of infrastructure. And therefore, again, back to solutions, rail, barging, ICDs, that is part of an ecosystem. And we stimulate that conversation. We look beyond our port. We engage in total solutions. Now, of course, there as APM Terminals, being part of the Maersk Group, we have the capabilities to look at an integrated value chain, and with our mother company also help businesses over that whole value chain.
You earlier said that you're in touch with the government. How would you describe your conversations with the government, when it comes to actually getting things done and making things right at the ports in Nigeria?
We have extremely good conversations with the Nigerian Port Authority. We are very pleased because they are about a vision. They are not about short-term transactional. They are about how we build this together. And clearly, then sometimes those conversations take more time than both parties want, because you want to come to a good product. But yeah, time is ticking, I would say, for Nigeria and also for us. We have been very explicit about the investment we are ready to make in Nigeria, and we estimate, and it's not just, I want to highlight that, it's not just about the amount, but we are ready to invest an amount of 500 to 600 million in the upgrade of Apapa. But moreover, next to the money we invest, it's about what's the quality of the service. What can Nigeria expect from an operator as APM Terminals, and what can your exporters expect from our service? So that also should go hand in hand with a better productivity. And it's arguably sometimes more important than just the plain money. It's important, it's foreign investment, but what do you get out of it? And there we take pride in being what we call the best operator with our unique production methodology. I can only say that the engagements which we have at a fairly high level in your country, that the body language and the sincerity, I really feel that. And we have had engagements at a president level from our chairman. We are engaging in the country at a ministerial level. The most important contact for us, of course, is the Nigerian Port Authority, and there is sincerity, and that is not just the body language, but we also know because we are discussing the plan that we have been proposing. As said, you always want that to go faster. And so if there's one plea, and we take that responsibility, is let's accelerate because it's necessary. And infrastructure projects take time. So the moment we have an agreement, we need to start to prepare, we need to start to build, and that will take some years. We need to order equipment. So every day you lose is a day where and I'm a strong believer in Nigeria, is a day that you can't get the cargo in or out of Nigeria.
Talking about driving exports as an alternative to wholly depending on crude oil. That's what we'll also follow up on that conversation now with the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani, as he joins us for the commodities segment. Mr. Rwani, good morning and welcome to the program.
Good morning and thank you for having me.
Great. And we seem to be hearing and having a lot of export-driven conversations in Nigeria these days. That was APM Terminals. We also had one earlier in the week with Lagos Free Zone about efforts. And it does seem there's optimism in the air, even though not as much as we would have loved to see. What do you see?
Yes, I can understand this. What is happening is that because the exchange rate is getting fairly aligned with reality, exporters are being encouraged or incentivized to begin to export. Not only export, but we are beginning to see inflows of other, invisible sources. What I call invisibles are from services, and therefore, when those ones begin to come in, it begins to strengthen the currency. And let us step back a little bit and say, it's 48 hours since we had the MPC meeting. What has happened? How is the market reading this? And then we come back to the question of export intensity. Now, 48 hours ago, the currency, between then and now, the currency has appreciated by about almost 0.38%, both at the official level and the parallel market. We are seeing the parallel market trading at about 1,618, and the official market trading at about 1,592. The difference between the two is still about 30 naira or 25 naira, which is higher than what it is, but it's fairly safe to say that the currency is within a stable path and is moving in the right direction. Number two is that the DMO has had a treasury bill auction.
Sorry, Mr. Rwani, sorry, let me interrupt you before you go to number two. Talking about the Naira, so yesterday, we did see that appreciation, as you noted, both in the official and the parallel market. And yes. I noted that it was connected to inflow of FPI. I wonder if you could help us to understand what drove the gain on the Naira of yesterday, this FPI that we're talking about.
I think the FPIs, all of them bet on the fact that the central bank will bring down interest rates. The fact that the central bank maintained status quo was a plus for them. So they kept their money, rather than take the money out, they now kept it in. So it's a temporary technical issue in terms of technical advantage. Fundamentally, the currency remains stable and is fairly priced, well, no matter what you say, against the dollar. And therefore, people expecting, almost all the speculators were expecting that the interest rates will come down by about 50 basis points. It didn't come down. Therefore, there's an incentive to, one, keep what you have in, and two, bring it back in. Also, you know that yesterday the British inflation rates came out, and it went up to 3.5%, which is much higher than was anticipated. So there's a possibility that the Bank of England will probably increase interest rates soon. So what investors are doing, taking short-term gains by investing clearly in those markets where you think there's some stability, where there's a spread, which is like the Naira spread is there, the carry trade spread, and therefore those guys are doing that. So I wouldn't be disturbed by the fact that the Naira is trading flat and is gradually appreciating.
And the CBN governor, Mr. Ruwani, also said at the MPC that the Naira is now more competitive. What does that mean, really?
Well, I think it's a businessman's language of saying that the Naira is aligned closely with its fair value. So it's competitive means that I would rather stay long in Naira than stay long in any other currency, or stay kind of neutral position.
But doesn't Mr. Ruwani, when you say that, doesn't it mean that perhaps it's because the Naira has lost some value, so our imports, our exports are now cheaper? Doesn't it also reflect that stance?
No, that is the goal. The goal is to ensure that the value of the Naira is stable in the markets. And so when it says it's competitive, it means that it's time, you do not lose anything by investing in Naira. Let me explain what that means. If the rate of inflation, official rate of inflation, is 23.71, and the one-year yield on treasury bills is about 24.11, basically, by investing in Naira, right, you don't lose anything. You are actually compensated. You are earning more than the rate of inflation. And that is what the central bank governor means by being competitive. Being competitive, one, being stable, two, and you're able to plan and forecast. And if you look at the balance sheets of the top 10 Nigerian companies on the exchange, you will find that many of them have domesticated their international debt. Therefore, rather than having due to parents or due to suppliers, you now have due to Nigerian banks. And that is healthy. So that what it means that this year, you're not going to have all these huge forex losses. Don't forget that last year, the top 10 or so had about almost 1.7 trillion naira of forex losses due to the translation losses because they were holding international debt. Now they are holding domestic debt. So when you put all of this in together, you see that the Naira, even though it's fairly priced, it's not likely to witness those violent swings and make people lose money as they lost a couple of years, 2-3 years ago.
All
so
right.
we are on a stable.
Yeah, you're on the second point, Mr. Ruwani, on the DMO.
Well, what we are saying, let me go back now. The DMO issued their treasury bills, and those bills are coming at rates, and I just said it now, that the rates were higher than the rate of inflation when you take the one-year rate. So it means that for Nigerian investors, institutional investors, for FPIs, it is safe to buy treasury bills. And if you see that there was an oversubscription in the one-year paper, because that rate is quite attractive. So generally speaking, we have said in 48 hours, we've seen stable exchange rate appreciating gradually. We've seen treasury bill issues, which were slightly higher than the rate of inflation. Then also, well, what we are seeing also is that in the domestic commodity prices, we are beginning to see the commodity prices increase again. Apart from tomatoes, which had come down because there was an extraordinary situation with the tomato Ebola, which took it up to 70K, but now it has come down to as much as 50K, and which is fair value. Well, we are seeing this thing because the planting season has started, and what we've seen recently is that the price of flour is up. I think they're announcing one on Monday. We've seen the price of Gari down to 36,000. and we've seen the price of pepper down as well. So we are in for a season for the next 1 or 2 months where the price of those goods that are planted in Nigeria are going to be increasing. We have to watch out for that. But also, on the same note, we know that the price of petrol, PMS, is 890 naira at the fuel station, and diesel is at 1040. So effectively, diesel has come down, and effectively, the price of petrol at 890 is down. Now, Dangote has said that he's going to continue to bring down the prices as long as he gets the crude. So that's good news for us because there's a strong correlation between the price of petrol, the price of diesel, and transport fares, and also the rate of inflation. So it means that the next set inflation numbers that are going to come out for May may reflect some moderation or consistency in what we saw in April. If that happens, then the central bank and the NPC will be in a position to consider bringing down the rates of interest. Just like we said earlier in Ghana, at least 2 years ago, the Ghanaian inflation rate was as high as 51%. Now, 54% is now down to 21%. So it does mean that interest rates can help moderate inflation. However, the inflation factor in Nigeria, a major cause of inflation is production and output constraints. So if we deal with the output constraints, which are structural, part of it power supply, part of it logistics cost in terms of road infrastructure. If you deal with those things simultaneously with managing the money supply and managing the interest rates, you might begin to see a moderation in inflation. I do not agree with the IMF that inflation is going to go as high as 27 or 30% this year and 37% next year. That was based on the assumption that the price of oil will fall very sharp. I do not think that's going to happen. So we can actually align ourselves with what the World Bank is saying, that the average rate of inflation this year is going to be 22%. I think that would be considered to be a realistic assumption at this time.
Yeah, Mr. Rania, I'm glad you brought up the issue of energy because when we look at the expenditure basket of Nigerians, I mean, some made available even by the CBN, one of their surveys shows that energy has even overtaken food, as a prominent source of expenditure for Nigerians. And we know recently the World Bank had criticized Nigeria's electricity subsidy. The government they've been warning us about, removal of subsidy of electricity. So what direction do you see this taking and how? Because obviously once they take out the electricity subsidy, it feeds into inflation at the end of the day. So I don't know if we're going to be talking about a cut anytime soon, but what trend do you see or your expectation when it comes to the issue of electricity, energy expenditure, and the issue of subsidy?
I think the energy equation is much more complex. When you have one unknown, it's called simple equation. When it's two unknowns, simultaneous equation. When there are multiple unknowns, it's called quadratic. The Nigerian energy situation is quadratic. It's almost intractable. You have the question of the overhang of the debt of the people that bought the privatized discos. They have that debt, and many of them borrowed in dollars with high interest rates, and they are virtually bankrupt. So whatever money you pay to them, they actually use that to pay interest rather than improve the network. Two is the fact that these same companies are also being owed. They are not collecting the money that the subscribers from the subscribers, mainly government. Three is that there's a metering problem. The meters, we are talking about getting 5 million meters in a country where there are 37 million households. So that ab initio, there's a gap of about 32 million households without meters across the country. So what does that? It leaves with estimated metering. Estimated metering process is actually giving yams to goats to hold for you. The guys who are doing the estimating billing are taking money from people. They are gouging people. So the energy question and the solution to the energy problem is much more complex. That's why we're having 5,000 megawatts when our needs are in excess of 40,000 megawatts. So the gap is there. And quite frankly, you cannot grow optimally except to deal with the energy problem. So our proposal is that you've got to write off those debts and against the equity of these people and bring in new investors into the disco space. 2, you've got to be very aggressive in your metering. 3, you have to adopt cost-reflective tariffs. And the truth is that cost-reflective tariffs, if you have power supply from the grid, it's 3 times or 4 times cheaper than running your generator and your diesel. So if cost-reflective tariffs can lead to quality and increase in quality and improvement in quality and increase in quantity of electricity supplied, it is actually cheaper for the consumer than using his generator or whatever. So if you have that together with your solar, you will find that energy cost comes down. If energy cost comes down, growth increases. So there's that strong correlation as well between energy output, which is about, for every 1,000 megawatts increase, there's about maybe 0.2% or 0.1% increase in GDP growth. And don't forget that is major. So to be honest with you, yes, the monetary policy tinkering and all of that is creating some stability in the financial markets and the financial indicators. But the growth and investment indicators will be catalyzed if we do something about power and we do something about logistics, and more than anything else, we do something about security. Because even if you have power and you have logistics, you still have to do things about security. But it is said, and it is believed widely, that once you have increase in growth and employment, then security, the insecurity drops. So it is, it's one leading to the other. What causes one and what correlates with the other. I think those are the issues that we have to deal with. But definitely, what we are seeing is after the NPC, we are going to get GDP numbers very soon, and we are hopeful of. The consensus is that it's going to be over 3.6, 3.8%, which is positive. Then we are also going to see a couple of incentives for investors if it is done properly. Then probably, and most likely, you are going to see some slight improvement between now and July in most of the indicators. And I say this very, very responsibly. I mean slight improvement, because any movement in the right direction is always taken over by people to start showering praises and bringing out the champagne glasses. It is not time for champagne glasses and celebration yet. It's time to commend policymakers and to encourage them to reform the institutions and make sure that leakages are reduced, and also that the people begin to see the benefits of policies and actions. Right now, the policies are good, but the benefits are just trickling and nobody feels it at this time.
Yes, it's so true, Mr. Arwani, from conversations that the benefits of those policies are just trickling in. And you talked about how they could deal with that debt that has been placed at about 800 billion naira. That's government to distribution companies. That's a huge one. But well, we do have this platform to continue conversations at some other time. But Mr. Bismarck Arwani, Chief Executive Officer of Financial Derivatives Company, thank you so much for your time and your views this morning.
Thank you for having me in.
All right, earlier we told you about the World Products Day. That was globally for 15 years now. It's being celebrated globally May 21st. They had a meeting in Lagos, a group of stakeholders with the theme Build Bold, Solve Big, and it brought participants who call themselves product professionals, startup founders, scale-up teams, ecosystem enablers, as well as others in the real sector value chain. World Products Day are celebrated for 15 years now. They're assuring that this is practical, that unlike general technology conferences, World Products Day in Lagos is grounded in execution, designed to give attendees tangible takeaways from customer discovery tools to recruitment opportunities that's needed to build better products that solve local and regional challenges at scale.
Africa doesn't have an innovation challenge. We have an enablement challenge. So the number is pretty much, from that understanding after years of working in the impact space, after years of being in communities, seeing the problems that they're experiencing, but also seeing how those communities are actually innovating across those problems, and then arriving at that conclusion and saying, actually, enabling that innovation at scale is the issue. So 100,000 product people, that actually is a call to action. It's a challenge to the innovation community to say, how can we all come together to build that inclusive ecosystem to support innovators at the very early stage of their journey? So from identifying that problem to actually then going around to validating the problem and then building solutions for it. So starting from the very basic of what is the problem that I'm solving for and making sure that that ecosystem supports them from that early on. So it's a call to action, it's a challenge, and it really is coming from that place of experience of working in these communities and seeing how they're innovating around the solution, the problems that they experience.
So that's World Product Day, just giving more attention to the product and manufacturers at the core of that. Now let's head to the global space now with Will Ibong. And I see one news that she has is Bitcoin. I thought it was Laddie's space, but I mean, when they say success has a lot of siblings and family members.
Oh my goodness.
Bitcoin is looking successful now.
Yeah, so now I have to
stay on Bitcoin.
Yeah, it's my family, it's my relative, I have to, how it works.
Sounds good.
Sounds good. So let's see, Bitcoin soared past $111,000 on Thursday, hitting a new all-time high. And the surge is driven by optimism around U.S. crypto regulations, strong institutional demand, and economic concerns following Moody's U.S. debt downgrade. Now, a pro-crypto push from President Trump's administration and a key Senate vote on stablecoin rules have also boosted sentiment. Even J.P. Morgan CEO Jamie Dimon, a longtime skeptic, now says the bank will let clients buy Bitcoin. Now, telco giant telecommunications company BT Group lifted its dividend after reporting a 25% jump in free cash flow to £1.6 billion, despite a 2% drop in annual revenue. Profit before tax rose 12% to £1.33 billion, driven by cost savings and fewer impairments. Adjusted EBITDA edged up to £8.21 billion. Openreach saw strong growth, while consumer and business units posted lower revenues. Now, BT reaffirms that its free cash flow target of £1.5 billion for the new fiscal year. Now, Japanese car maker Honda will add a fourth assembly line at its Gujarat plant by 2027, boosting annual output by 650,000 units and making it Honda's largest motorcycle plant globally. The 9.2 billion rupee, that's about $110 million, will create 1,800 jobs and focus on 125cc motorcycles. Capacity across the countries will rise to 7 million units annually. Now, the move comes after Honda hit 70 million units produced in India, its biggest motorcycle market. Now, Nike will start selling directly on Amazon in the U.S. again, ending a 5-year hiatus. The company had pulled out in 2019 to focus on direct-to-consumer sales and avoid counterfeit concerns on Amazon's third-party marketplace. A Nike spokesperson said the brand is expanding digital partnerships, including Amazon, and enhancing retail experiences with tools like AI-powered search. Amazon confirmed it will soon offer a wider range of Nike products and said it's giving independent sellers time to sell through overlapping inventory. The move boosts Amazon's push to attract premium brands following its recent luxury tie-up with Saks Fifth Avenue. Now, the EU will begin imposing tariffs on Russian fertilizers in July, facing them through 2028 to reduce reliance and cut funds to Moscow. Over 25% of EU nitrogen fertilizers come from Russia and Belarus. Farmers oppose the move, citing low cost and strong logistics, but Brussels says it will boost EU production and curb indirect Russian gas exports. Now, the UK government began the 2025-2026 financial year on a weaker fiscal footing, borrowing more than analysts had forecast. According to the Office for National Statistics, public sector net borrowing in April hit £20.2 billion, well above the £17.9 billion predicted by economists. The figures come despite a downward revision to borrowing for the previous financial year, now estimated at £148.3 billion, down from £151.9 billion. Analysts said higher borrowing may add pressure on government finances, particularly as policymakers weigh spending commitments ahead of the next general election. Now we have our correspondent, our London correspondent, Juliana Olayinka, over there to give us a breakdown of what's going on, really. You know, we saw the inflation data. Good morning, Juliana. Let me just start off with that. We saw inflation data come out yesterday, higher than expected, you know, a spike in that. And Britain is already starting this new financial year with higher than expected borrowing figure, raising fresh concerns about the state of public finances. Now, with Britain, the UK borrowing more than expected in April, just over £20 billion. What kind of pressure does that put on the finance minister, on Rachel Reeves, ahead of next month's big spending review?
Good morning, Will. Well, you said it all, really. I think Rachel Reeves, the Chancellor, is under pressure. I think she got some brief respite late last week, of course, when we got quite good GDP figures showing that the economy was the fastest growing economy in the G7 in Q1 of 2025. That surprising 0.7% uplift. But as you said, yesterday we got pretty disappointing inflation figures, the highest they've been in more than a year at 3.5%. And then, as you said, quite rightly, this morning, the Office for National Statistics have shown that borrowing in April was at £20.2 billion. The fiscal year has gotten off to a really poor start. And one of the reasons why borrowing was more expensive is because there was more spending on benefits, which, of course, isn't great. I think we're showing pictures from Geneva, which isn't about the UK economy. But I think what Rachel Reeves wanted is that in October, of course, they mentioned, you know, scrapping the winter fuel payment and also trying to be fiscal responsible. But then, you know, politics happened and the rise of reform is there. The Prime Minister, Sir Keir Starmer, he sort of backtracked on winter fuel payments, which basically means, Will, the Chancellor is going to have to, you know, scratch her brain harder to try and find a solution. And so it is really difficult at the moment in the UK for this Chancellor, who is also, of course, as we all know, struggling to try and contain runaway tariffs that are coming out of the US. So, as I said, not great, considering that we've had national insurance contributions that was supposed to really help buffer the government's tax purse. And it hasn't done that because the results, of course, speak for themselves.
We'll wait and see how that plays out for Rachel Reeves. But still on the theme of fiscal pressure, but this time in global health, a high-level panel at the 78th World Health Assembly in Geneva is spotlighting how smart financing models could close the care gap, especially in cancer and cardiovascular disease. Juliana, you were live at the event. What stood out most about how countries can actually fund fairer healthcare, even as budgets continue to tighten?
Yeah. But yes, I was in Geneva for the World Health Assembly earlier this week, which, as we know, for gathering, particularly more high level, because, you know, we're difficult time at the moment in terms of donations and aid and figures for health, because we know that the donating for 2025 membership donation, which means there are hundreds of thousands of organisations basically penniless and broke at the moment. So this particular gathering was of more importance. The movement health is basically a bridge that puts together health practitioners with locally led best to reach the underserved. You know, these are topics that all of us are familiar with. I think we all know somebody who struggles to get access to health. And even those of us who are well versed in health academia, shall we say, we can sometimes struggle if we're having symptoms of various causes. And so I think, you know, at this particular event, what they were trying to do is find solutions, mostly using AIRs to health access, which is so crucial. At 45, we're still having these same discussions.
Juliana, I think we're having...
Essentially, that is what the gathering was about.
Okay, Juliana, we're having technical issues. Internet seems to not want us to have this conversation, but I'm sure we can explore this some other time. Really, it's a shame that the internet is interrupting this conversation, but it was great having your perspective, Juliana Olainka, our London correspondent over there in London. Thank you so much for joining us on Business Morning. It's always great to have you. So, it's just a shame we couldn't have that conversation because, you know, seeing that AI, that's the way the world is moving towards, so AI-driven data. We've also had, you know, the first in Nigeria, you know, the first surgical, you know, surgery, you know, with AI. So it's like this is where the world is at right now. So the positioning of the World Health Assembly, the World Health Summit, is like, how can we drive AI in the healthcare sector to give affordable healthcare to people, the underserved, the people who can't afford, you know, this, you know, expensive healthcare. How can we make AI provide affordable healthcare? That's what they're just looking at. And, you know, monies have been pledged, over $170 billion right now, people are pledging. So we'll see that it's not going to be all talk
when you come to the funds being pledged, that brings another issue. Yeah. Because, you know, we've been talking about climate and how much has been pledged, especially for the emerging economies, you know. But talking about AI, it's the norm now. It's been accepted as the norm for AI. Sure. But I think for Africa, the conversation has always been, how do we make it ours? Let it solve our problem. Let's not just follow the wider conversation. Let's domesticate this AI. Let's have our own software that will make the robots or the programming and all of that to solve our own problem, our own way.
Maybe understand our language.
Yes, of course. I mean, of course, that's no big deal. In China, they have things that speak their own language. Yes. So why can't we do ours? Definitely. You know, I guess that's the next challenge for us.
Definitely we'll move to that level. Thank you.
All right, Will, thank you so much. All right, just before we let you go, it was a red market at the NGX here in Nigeria yesterday. The market lost 0.10%. But it's still around 109,000, so it closed at 109,619.10. The market cap is still around 68 trillion, looking for when it to be 70 trillion. We can do it. Let's move the market. Activity was all in the red. Top gainers yesterday, RT, Briscoe, Unicel, and livestock. Livestock seems to be gaining some attention, and so we see it reflecting the counters right there. I thought we'll have that counters there. Banking in the red. Consumers on the flip side. Industrial in the red. Insurance, more than 1% in the green yesterday. So the penny stocks are getting attention again. So maybe you want to look that way. Oil and gas still dragging behind us, 0.5% at the close of trade yesterday. At 1 p.m., Laddie Williams will be here with Will Ibong. You have intraday market numbers and see if the market has recovered by then. And of course, they'll give you other stories happening in the world of business. That's at 1 p.m. So don't miss that. Laddie and Will at 1 p.m. But for me, I'll be signing out now. Thank you so much for being a part of Business Morning. I'm Ini John Mekwa.